Hi, my name is Chris Golan, and today I'd like to share an investment opportunity with you for a company named CF Industries. CF Industries was founded in 1946 as Central Farmers Fertilizer Company. They're based in Deerfield, Illinois. They are a worldwide manufacturer and distributor of fertilizer products for the agricultural industry. They currently operate 11 different plants and numerous distribution sites across the United States and Canada. The company supplies approximately 24% of the nitrogen and 12% of the phosphate fertilizers used in the agricultural industry in the United States. Although CF does export worldwide, North America accounts for about 91% of their sales. As mentioned, they do operate in two segments, in nitrogen and phosphate fertilizers, and they also operate the largest nitrogen complex in the United States, which is located locally in Donaldsonville, Louisiana. They originally operated for the first 56 years as a company, as a collection of agricultural supply cooperatives. CF Industries Holdings Incorporated began publicly trading common stock on the New York Stock Exchange in 2005 at an initial price of $16.25 per share. In contrast, today's stock price is about $176 per share, and they have a trailing 12-month revenue of just under $6 billion. So before we get too far into particulars of CF Industries, I just want to talk for a brief moment about why would you want to invest in an agricultural chemical company. There's a consistent and increasing demand for fertilizers in this country. The demand for fertilizers is seasonal, as nitrogen, for instance, nitrogen-based fertilizers for growing corn has to be applied on an annual basis as a fertilizer is depleted for that year's crop. So there is a continual need for the fertilizers on a yearly basis. The population growth worldwide will also contribute to the need for more food and for growing more crops as the rise in food demand that comes along with the additional population growth. An increased use of biofuels in the United States in particular with the production of ethanol products, which is derived from corn mostly. Lower natural gas prices, which is used in the production of fertilizers, would be advantageous in today's times, and the consistent growth of the industry as a whole. Looking at some of CF's financial information, and all these numbers are between 2008 and 2012. From a liquidity standpoint, we see that they are, since 2008, they have been increasing the amount of cash that they've been retaining on hand up to a 2.39 ratio in 2012. The total asset turnover has been decreasing since 2008 to a low in 2012 of 0.64. Their asset turnover is on a seasonal basis, as their products would be understandably stockpiled after production and then sold when it is time for crops to be planted. In terms of financial leverage, they've consistently had numbers below 2.0, so they're not a very highly leveraged company. Their profit margin has been steadily increasing to a high of 30.29 in 2012. Their return on equity has actually decreased since 2008, decreased sharply from 2008 to 2009, but since then has remained steady in the mid-30s. Their price to earnings ratio has been steadily increasing from 3.84 to 7.32, and their market to book has gone down slightly some from 5.25 to 3.02. Looking at their historical stock prices, as we can see from their initial opening in 2005, has grown tremendously since then in a relatively short amount of time to their current stock price of around $176. As we see here, you can see the downward trend in 2008 and 2009 when the recession hit, and it kind of gives an indication as to how CF's stock price moves in line with the market. The company, as mentioned earlier, does provide. They are closely knitted to the corn production in this country, as they provide a lion's share of the nitrogen-based fertilizers used in growing corn. And this slide here just demonstrates how the increasing trend in the production of corn in recent years, for among other reasons, the production of ethanol for vehicles. And also you can see where the matching trend line for CF's average stock price has been increasing as well over the same time period, but on a much larger magnitude. Comparing CF stock price to three of their competitors, we see that they've been matching pretty well along from 2008 to 2010, and since then they've separated themselves from the pack, and their stock has been performing much better over the last 2 or 3 years. Looking at a DuPont analysis or a breakdown of their ROE, returns on equity, we see that their return on equity is driven mainly by their very high interest burden, meaning that they're paying very little in interest on their debt. So their debt is structured in a very positive manner. Their relatively low leverage ratio also indicates how the ROE is not based on or not structured around debt. They're very low leverage ratio comparatively, and also their relatively high profit margin, as seen especially from 2010 to 2011 to 2012, is helping to push their return on equity as well. Comparing their return on equity to some of their competitors, we see that CF's return on equity has performed quite well, especially since 2010, where they have surpassed their competitors and are now leading the pack among this group. We can see the effects that the recession had from 2008-2009 on CF's ROE, and how they have rebounded since 2010, indicating that management has done a good job of getting the company beyond the recession. Looking at a snapshot of CF's weighted average cost of capital, we see that their WACC number is about 10.6%, and we can see from their capital structure how they have very little short-term debt and a relatively low long-term debt compared to the rest of their market cap. From looking at an economic value added perspective, we're going to get a sense of how the company is adding value from an economic standpoint by how well they're using their shareholders' investment. And we can see from a net earnings or net operating profit after taxes of nearly $2 billion and a total investment capital of nearly $9 billion, they've expected from that $9 billion in investment to get a little over $900 million back and off that capital. And to get your economic value added, you would subtract your net operating profit after taxes and the capital charge to get our economic value added of over $1 billion. So the company is performing quite well. It's very, very stable. As we can see by looking at the blue line here is the trend of their EVA. It has have a small dip here, but only for 2 quarters in 2011, and since then has rebounded nicely and has been consistent since then. And comparing CF's EVA to 3 competitors, we have where they've been consistently the better performing company of these 4 by remaining on an annual basis, annual number, on the positive side of our chart here, even through the recession. So they're adding value to the company in 2008, 2009, even while some of their competitors were falling by the wayside and suffering harder times. Looking at the beta for CF, we see how their trend line running through here has been, it has been on a positive side in relation, comparing to the market. In this case, you're comparing CF to the S&P 500 index. The raw beta number of 1.28 in terms means that they're performing approximately 28% more volatile than the market average, which is a good thing when the market's moving in a positive direction. When a market does have some dips, the dips for CF will be a little more severe, but as we can see by their stock price, they'll be able to recover much quicker by having a spread over the market average a little bit higher and in this range. On a future outlook, looking to project the future stock prices for CF, we look at their basic earnings per share, projected earnings per share for 2013 and 2014, and multiply that times our price per earnings ratio, and also projected for the same 2 years, and we get our projected sales price, or projected stock price. And as we can see, the current stock price is around $176 per share. So for the remainder of 2013, we see a projected slight increase in their share price, and in 2014, a slightly relatively a dip in their stock price. But we foresee the stability of the company continuing in a positive direction, and foresee a bright future in terms of the stock for CF Industries. Thank you. Hope you enjoyed the presentation. Have a good day.